Welcome back, everyone. This is NYU Grads Daily Podcast. It is Thursday, October 19th, after market hours, and we had a very busy day today. Let's jump right in because there's a lot to cover. So the market closed pretty ugly today, and it really tried to whipsaw everybody, both bull and bear. But as you know, I like to look at breadth first, as just a matter of habit. We had 50, 50 new highs. We had 960 new lows. I mean, to be quite honest, that's all you really need to know. I could stop this podcast right now and that would describe it. Right now, we have 80% of shares trading below the 50-day moving average and 73% trading below its 200-day moving average. 19% of shares were advancing versus 76% declining today on Thursday. Now, the Dow opened up even right where we closed on Wednesday, but keep in mind the pre-market or after hours was pretty negative, so it fought back. Same thing with the NASDAQ, same with the S&P and the Russell. We opened up right where we closed on Wednesday. We fell pretty hard, and then right around the lunch break, we were rallying around that time. And today at 1 o'clock, Jerome Powell was speaking in New York at an economic conference. Now, keep in mind, all of his speech today was all pre-prepared, so nothing new. And it was quite funny because the live cast or live stream got interrupted, and I didn't know what was going on. But on the news, it was evident that there were climate activists protesting that kind of delayed the speech. So as soon as it was scheduled to start, we rallied. Even before he spoke, it's like there were algos already programmed to support him speaking. So we rallied really hard while the protesters interrupted. And then he started talking and we kept rallying. As soon as his prepared remarks were finished and the Q&A started, we started to sell off immediately, all across the board. And we sold off hard all the way into the closing bell. One thing to kind of point out, despite all of this crazy whipsawing back and forth that was going on, Tesla was down all day. So when I take a look at the Tesla chart, I looked at it all day and it was like down either 8%, down 10%, but we finished the day down 9.87. This is in addition to the 4-point-something% down yesterday on Wednesday. We are on Tesla right at the 200-day moving average. If this area of 220, by the way, the 200-day moving average is precisely 214. So if we break 220 to 214 on heavy volume on Tesla, I'm not 100% sure where it stops, because Tesla rocketed off of like a low of 150 back in like April. So if we break this area and we break the 200-day, it would be very easy for Tesla to go down to 180 to 160. So we'll see. It's in a lot of trouble. And I'll cover some of the other Magnificent Seven coming up. I have a bad feeling about where everything is going, not just financial markets, but the geopolitical thing with the conflict that's going on, our own elections coming up in 2024, the deficit, the debt, of our nation, of just spending bonanza that's been going on since, forget COVID. Let's go, forget the 2007, 2008 great financial crisis. I'm going back to 2001.com. Okay? So since the dot-com crash, we have been in expansionary mode for debt. And I believe that that may be coming to an end, and interest rates are never going back down to where it was during COVID. So baseline 4 to 5%, we got to get used to it. And if it keeps rallying despite the efforts of the Fed heads trying to say we're going to stay longer for higher for longer, we're going to be data dependent. Everyone's assuming we're going to have a termination rate target of like 5.5%. But what if we go to 7? What if we go to 8? Can our portfolio stand that? Can the housing market stand that? Can corporate debt stand that? And I don't know where we're going to end up. But right now, it's risk off. A lot of things are looking very shaky right now. In the morning, there was a very tight range that was developing leading up to Jerome Powell's speech. We were on the ES bouncing around that 43.26 to 43.32. And we just started to whipsaw up and down and all around. I felt like the market makers were pretty much trying to make both the calls and puts for 0-day expirations all expire worthless today. And we closed at the lows. It was a horrific afternoon, horrific session. Up until the Jerome Powell speech, it was pretty orderly. As soon as his speech was supposed to start, it was just nuts. What was strong? The usual suspects: yield, volatility, gold. What was weak? Every sector was red. Real estate led to the downside, then consumer cyclical, healthcare, financial. The good thing is that technology did not lead to the downside. What to keep an eye on: earnings, the Magnificent Seven. Man, Nvidia and Tesla look really bad, so big emphasis on those two. Watch yields. Geopolitical risk: I believe Israel now has the green light for ground troops to go into Gaza, and economic data. So it's going to get really bumpy here. I don't know if Santa's coming to Wall Street this year, but let's keep a close eye on it. I'll see you guys after the Friday session. I'll try to post that before Monday's open over the weekend, maybe Sunday. But I will talk to you guys soon. Thank you again. Please subscribe. Please follow me on Substack Notes. If you have any friends or family members that you feel that might benefit from this, please share it. I have a referral program right on the Substack page. There is no paywall yet, but I will be launching a paywall in 2024. So you still have time, but you can build up some of the referral credits and points. So thanks again. See ya.